Hello everyone, I'm Marcus from My Locks News, your host for the Daily Tesla Report for Monday, June 26, 2023. I'd like to remind you that you can subscribe to our YouTube channel for daily and weekly updates on the stock market. In our analysis, we observed that about a month ago, we closed above a descending channel cap, which triggered a long-term buy signal. That January low is likely a solid pullback support now on the way down in the upper 190s. Our initial long-term target was met in a month, 277.69. This rises this week to 277.69. It is a resistance ceiling that can contain buying until July, possibly until the fourth quarter. Therefore, over the next few months, we may have trouble here, and we could possibly fall to the channel support that is now at 182.21 and rising. These converging areas are our long-term support base, and having tested the channel cap, we can pull back to the channel bottom. The thing to do, and the thing that should have been done anyway, is that when we tested this formation last week, and at that time it was in the mid to 70s, it is now reaching the upper 270s, 276.19. Any test of this area provides opportunities to buy, say, put options of 220 to 225 that do not expire at least for a month or two. And maybe you could opt for put options of 190 or 200 that do not expire for several months. Of course, there is also the short-term option. It really is a put option of 245, perhaps, that you could buy once the 276.19 formation is being tested. That's your opportunity to buy, for example, put options of 246 to 248 that do not expire at least for a week. That's the short-term option play. The 2 to 3 week option play, as I say, is the 220 to 225 put option. On the upside, I must mention that I'm a 267.06 a session containment level, so this is really more for daily traders. You have this long-term 2/3 descending speed line that we crossed last week, but we did not close above. We are at a considerable distance from it from a daily trading perspective, so it is a level that I believe can contain daily buying pressures. And if we close today above 267.06, I believe you can expect that 277.69 formation tomorrow, Tuesday. Finally, and I've already said it, closing below 242.23 expects this ascending 1/3 speed line of 221.76 that projects from that January low. It can well contain selling until July, and we can rebound back to the upper 270s, low 280s for that point again within several weeks of doing so. And once again, it is not a direct drop. The decline I am anticipating, the possibility of a 197.24 is not a strong expectation unless we close below 221.76, and then it is quite clear we will test this channel bottom that is currently around 188, and that could bottom out for the rest of the year. In summary, we are at a turning point in the market with significant resistance at 277.69 that could contain buying until July or even until the fourth quarter. If this resistance is tested, it could be a good opportunity to buy put options. However, if we close above 267.06, we could expect to reach 277.69 tomorrow. On the other hand, if we close below 242.23, we could see a sell-off until July with a possible rebound to the upper 270s. In general, the market is showing mixed signals, and caution is recommended. That's all for today's analysis. If you found this information helpful, please don't forget to hit the like button. Your support helps us to continue providing these insights. And if you haven't already, make sure to subscribe to the My Locks News channel to stay updated with our daily and weekly market analysis. We're always here to keep you ahead of the market curve. Thanks for watching, and we'll see you in the next video.